alarming to me that I'm a 27-year-old entrepreneur within the United States, and I'm not doing that in New York. I'm not doing that in Silicon Valley. The money in the United States, the value being raised has been pushed out from tax laws, and California and New York and all these cities are realizing that. And this is where, taxing that rich, you have to find that balance because it is forcing all of the entrepreneurs to look outside the United States. Hollywood's huge for this. Hollywood has gone completely. Hollywood, I think in 5-10 years is going to go pretty much bankrupt within California unless they switch something around. There is almost no filming that is actually done in Hollywood anymore. It is all done either foreign or in Atlanta, or I think in Texas in some areas as well. And it's pushed out of the state. And as that gets pushed out and gets pushed out further, that money is leaving the U.S. economy, because as the money is spent elsewhere in foreign areas, that money gets reintroduced into their circulation. So this is like the conversation around the policies within Web3 entrepreneurship. We're now a $3 trillion industry. We have expectations on the minimum to be a $10 trillion industry by 2030, upwards of $75 trillion in a lot of people's eyes based off tokenization. And that's coming from grayscales and fidelities and different research entities, which is only really 5 years from now. That is a mass amount of money you don't want to push outside the United States. So it's very, what should I say? It is amazing to see the development from a bipartisan scale, because everybody in this chat right now, I'm curious how many people are watching live in New York or live in California or live in a state where you have tighter regulations. You can't buy certain cryptocurrencies. You can't use certain wallets or devices without using a VPN, right? A lot of you are still, even in the US, constricted to being able to purchase these assets. So all of that is going to change. You're going to see a ton of money pour into the sector, and companies like Chainlink and even XRP Ripple are helping to lead a lot of those initiatives. So it's really cool to see. And I meant to roll this back into a panel here, but there's going to be a digital asset conversation for New York. This is an amazing day. We're going to be locking in today, guys, listening to all of our senators, or not senators, but representatives here, senators and representatives from both the Republican and Democratic Party. And you're going to really start to see how mainstream Bitcoin and crypto is really going. For all the bears out there that keep kind of sitting there, I don't know what bears are doing. I don't know if they're just haters, if they grew up with a tough lifestyle in their childhood, which I think we all did, move past your past, grow up or something. I don't know, because this is the most bullish moment in all of crypto history. And this is going to be the last moment. Once all of this comes into play and all these conversations come to fruition, and we're at this 10, we're at this 15, we're at this $20 trillion market cap, you're not early. You're just in a new asset market class. That's it. So this is the time to lock in. I'm very excited to be here with you all. And I heard about 10 beeps in my rant there. So,
well, no, that's good. We've got a lot of people. We've got this thing to go live and cover all day. We've also got a lot of people in the wings for guest interviews. We're going to be pulling Kelly in, who was following the Hyperliquid drama that we mentioned right at the top of the show. Ooh. He can explain that. And that's actually been unfolding in real time while we've been covering this. They actually did end up taking a pretty massive hit. And it's very interesting watching Hyperliquid versus Binance. We've also got Gary Cardone, who's going to be calling in, I believe, at the same time as Kelly. So he's got an interesting take. We just saw the World LibertyFi team cover everything, and they, several times mentioned hard assets, RWAs, real estate. Obviously, Grant Cardone, very known for being tied to real estate, but I think together they're working on a couple different real estate tokenization plays. So a lot is coming down when it comes to hard assets like that. We're going to have a lot of good call-ins, and I do know we've also a lot of DAG fans in the chat here today. The CEO of Constellation DAG will be speaking at the summit here as well. So like Josh mentioned, tons to cover today. And we got to figure out the order here a little bit.
Yeah, let me just, we have Kelly in the wings. Kelly has that hype alpha. I have a little bit of an XRP story. I definitely want to get into that just real quick, folks, because there is a warning. I have to warn the XRP holders because there's a lot of bullishness, but there's a major, major red flag here. So Ripple Labs, they had their major legal milestone. They ended up settling at the $75 million. Remember, it was kind of locked, or they got to pay 150. Ripple Labs wanted to pay less. Settled out with 75, so that's good news here. Brad Garlinghouse called it historic chapter close. He said the crypto war ends in failure for those who try to use our government against innovation, aka against Ripple Labs. Now, we're in this parallel channel to the downside that we pointed out a while ago, and there's a nice target for the upside. There's a little bit of a bull flag pennant here. You can measure the flag, and boom, right there. But I wanted the warning. What's the DZ's warning here? Well, within this range, we have a little bit of a pattern that we just replicated, folks. So you can see here, we have fallen below the range on the 4-hour candles. And let me just draw something for you. The last two times, when we invalidated it here, we came all the way down to the bottom of the range. And you can see it right here as well. When we invalidated it here, we came all the way down to the bottom of the range. It looks like XRP might be invalidating its uptrend to the top of the range. I'm not saying it's guaranteed. I'm just saying the last two times it fell all the way down to the bottom of the range. And if you're wondering what the price is, that's going to be a significant about 25-30% drop. Gives you about $1.77 XRP. And last thing, the gaming sector, we have it down at the bottom. SEC closed its investigation into immutable without enforcement action, signaling regulatory easing. So people in chat said super is pumping. This might be a huge move for gaming tokens. Obviously, we need a lot more catalysts. We need alt season to kind of kick off. We need Bitcoin to sustain its run. We need maybe some whales to turn real bullish. We need Leo trades start dropping videos. Alex Becker start dropping videos. We need retail to get excited. But you're hearing it first. This might be the first step. This might be that first domino. And that's all I got.
Yeah, awesome. Thanks for your time today, DZ. I know you've got a really good upload to go shoot on some secret altcoin news that we just discovered that a lot of people are sleeping on, and it might be a really good opportunity.
Should we front run a hint?
I heard you were gonna
coins.
Yeah, I heard you're gonna film this while you're dancing too. So we're gonna get some ballroom.
I have ballroom dancing lessons later, so I'm preparing for the wedding. The wedding's pretty soon. It's almost about a month away from now. It's only like a month and a half.
Steps.
Yeah, I got to do proof of steps. It's a POS system. We're doing some proof of steps, and we're going to dance to Lady Gaga, and I'm going to wear a meat suit. She'll be in the meat.
Oh,
so it'll be pretty cool, man. It'll be pretty cool. So smash that like button. Smash the like button for love.
There you go.
For love, baby.
Shout out to wholesome family values. Everybody here at Discover Crypto, pro family. And I think that's going to pay off over time. So.
And just a quick hint on the video for tonight, turn on notifications. There are 4 crypto roundtables being held by the government, and they all have very suspicious titles that point to an altcoin. One of them is Bitcoin that points to a coin. And so they title the roundtable where you're like, oh, they're clearly talking about this altcoin. And so turn on those notifications and you'll see it tonight.
All right. Thanks, DZ. We'll see you again soon.
All right, guys, we got a few special guests joining here today. We are going to be doing these awesome 6-hour streams that you guys absolutely love and adore here as we watch the, of course, DC summit here throughout the day. But we're going to be bringing in Kelly Kellum and none other than Gary Cardone. It is good to see you guys again. Welcome to the stream. It's good to have you guys. You watching the blockchain summit at all today, or are you guys just tuning in?
I've been going through it, trying to stay up on what's going on while also trying to figure out this multi-streaming narrative, doing 14 things at once. But, we're live here on Discover Crypto. We're live on my X. We're live on BitLab Academy. We got Gary Cardone. I reached out to him earlier this week and happy to have him come back on. But there's all this drama, going on with Hyperliquid as well, which I think is just noise in the scheme of things. I'm more excited to get in the conversation with Gary, and then we can jump back over to some of the talking points from the DC blockchain summit.
Let's bring them up here. This is going to be, there's a lot to break down from the DC summit. I mean, they're talking from everything from tokenization to, of course, bipartisan crypto policy that favors everybody, especially people in New York. We have a lot of people in New York that can't even buy crypto really still to this day. And then they're talking about even tokenizing real estate, which I'm sure, Gary, I'd like to get to your thoughts just overall on the entire tokenization real estate sector. This is a huge conversation that's starting to kind of be uplifted by not only policymakers, but really closely on a state level. What are you seeing just within the real estate sector, someone that's been very successful in this new application of blockchain itself?
I'm probably the worst guy in the world to ask about this, maybe second only to my brother. Look, I personally think that we're going to tokenize a lot of things before we get to real estate. And not to put a damper on it, I do believe that market will come, but I think it's further down the road. Just like I think and have thought that adoption wasn't going to happen at the very bottom of the value chain, right? It's going to happen at institutional levels, which means to me that tokenization really should target real fungible products, crude oil, natural gas, equities, pensions, bonds, those type of insurance with, annuity streams. To me, those things are going to happen first. And I appreciate that there are companies out there doing this. I just don't see the volume of deals.
Yeah.
So it will come.
Well, Gary, one of the things you actually said last night on the space we were doing on the Mario Nawfal channel, you actually said something that I think is important for us retail little plankton out here trying to swim with sharks and whales, about the price valuation and whether it matters or not to these major players. When you're talking about not only ultra high net worth individuals, but also multi-100 billion or multi-trillion dollar institutions that we're all so excited for about when they're going to come in. And we think that they need to stack now so they could protect it. I'd love for you to sort of recontextualize that and share that with this audience, your thoughts on price point as it relates to larger players. Do they feel like they're in a rush to get in? Is it as much of a rush as we're hoping, or is this just going to play out when price stabilizes a bit more?
Well, I think that the small retail, professional investors are not unit biased. Okay, unit bias is, oh gosh, I can buy XRP for $1.70 or $2.40, whatever it is, and I can buy, let's see, I could buy 1,000 of those. That costs me what, $2,400 versus buying $1,000 worth of Bitcoin. That's just a retail, really massive undereducation on unit bias. It's just people like buying lottery tickets instead of investing, right? So that doesn't happen I don't care what the price is. I was never going to put 86% of my net worth into Bitcoin at $300. Never, not that's why I say risk adjusted. Today's a better price to invest in Bitcoin, risk adjusted and time sensitive. I value my time. I think you're going to wait around, generate more profits today at 88 to 150 to 225. It doesn't really matter. At 225, these people will be very, very comfortable with this product. They won't even care the number. I mean, they're going to say, I need an allocation of 5%, period. 450, 45,000 doesn't really matter to them.
Yeah, I agree with that 100%. That's something I've been mentioning a lot here about the time on market, the maturity of the market. There's actually the value here at around, especially around 80K, after you're seeing some of the richest, the most powerful asset managers in the world. The risk is far lower today than it was even in 2017. And I agree 100% with what you said. It's going to be, look, I need a percentage. Get it, whatever the number is. I want exposure. This is not a 1 year, 3 year, 5 year hold. This is a, probably not even a 10-year hold. This is, I want this in my portfolio for the rest of the time because it's acting as both a hedge and also a good upside asset. So if this 3 to 4% of my portfolio can outperform the other 95% of my portfolio, it balances real quick. So yeah, I agree. The big money is coming in a big way, and big money doesn't move fast. They weigh risks. They do risk analysis, and it's playing out almost exactly as we've predicted there. So 100% agree.
Well, in addition to that, we also, one of the things that's kind of popped up, and it seems like an ever evolving story with how new this industry is. We forget how young it is with this new sort of thing bubbling to the surface with this financial mechanism, the bit bonds, adding a new avenue for potential, basically raising money, for the U.S. government, also potentially budget neutral for getting Bitcoin exposure, as well as giving. I mean, what do you make of this? Is this just, are we still way too early to expect something like that to pass through? Is this going to be a multi-year sort of timeline to get something moving on that? Or is that something that's just a shot in the dark? Hopefully something similar will come in the near future.
Well, there's been a lot of discussion on the bit bond. Look, I think there's going to be 1,000 of these products. Okay. We're just seeing what's happening now. The market is going to create products that Wall Street buys. Remember, Wall Street sells things to people. People don't wake up calling Wall Street and going, hey, I need this product. Wall Street actually looks at all the arbitrages, all the gaps, all the differences and the needs of the marketplace, of what people are trying to accomplish, and they create products to meet those needs, just like you and I would create a software program to solve a problem. I'd like to go back just real quickly to the point that was just made about both the insurance aspect of the Bitcoin. And that is, I think the most professional investors, the big funds, the big pension guys, the people that study this and really put the proper hours into it are going to understand that they have bought a call option on the future of technology. Probably the most secure call option they could buy. This call option called Bitcoin never expires. That is very, very unusual for me to be able to store fiat, move fiat into something that never expires. And I think I have an option on the future of technology. I also have a put, an insurance policy on the complete collapse of the fiat system. So either one of the, even if the fiat system just does exceptionally well, Bitcoin still goes up. My call option's worth something. And if the whole system starts breaking down, or even parts of it, I think Bitcoin's going to play a insurance hedge to protect my downside. And it's extremely unusual that one could buy both a call and a put for derivative terms, a call and a put, and they have no expiration. Like that's big deal. Okay. A very, very big deal.
Yeah. It's very interesting how early we are to all of this too. I mean, we're watching the blockchain summit here today, and I completely agree with the tokenization talks as well. And whether it's going to be thousands of products, but what's very interesting to me is what is going to be the first access point for corporations? What's going to be the first incentive for them to really start adopting Bitcoin as well? I mean, we see GameStop coming out, sitting down with MicroStrategy, but is it going to be 0% capital gains tax? Is it going to be access to the carbon credit markets through tax incentives for flare emissions and natural gas providers that are converting wasted energy into Bitcoin miners? There's a lot of utility and application to this future of technology. And, someone that's just been so successful, both in the gas, the TradFi markets, now you're entering Bitcoin and this future of tech. For all the beginners that are just, kind of coming in that are new to crypto, that are worried about the price action. At the end of the day, retail is always going to be worried on, is this the best time to enter now? When they're coming into the market today, all they hear is recession talks. They're hearing tariff wars. They're hearing Bitcoin's bad, Bitcoin's slow, Bitcoin not good, and all of the same FUD that comes out every single bearish trend, so to speak, gets a lot of people to fear out of this market. And so my question to you is simply just, as someone that has had that success, that has seen TradFi, that is, betting necessarily against the dollar crashing, but, you are worried about the traditional financial sector. What do you see in Bitcoin that makes you so confident in this strategy you have in hedging your portfolio?
Well, I don't think very many people are in this, actually. I think that we live in an echo chamber that we think, look, no one knows about Bitcoin. That's just the truth. I spend time with these people, and these people don't even care. They don't care one iota about self-custody. Now, I'm not trying to be I'm not even going to make an excuse for it. These super rich people do not care about self-custody. They care about keeping their power and their wealth. And they're probably not going to redesign their entire life over taking 30% or 3% or 8% of their portfolio. They can't unwind all their lives. So look, I think we're still early. I think we're early I think we've actually accelerated the process for Bitcoin through the Trump administration, through technology, and through the discovery of all the stuff we're finding out about how much crime there really is in governments. I think we've accelerated Bitcoin's process by at least 6 years, if not 8, a full 8. And I think the cycle is completely broken. one thing I would like to talk about, I don't think we need like no capital gains on Bitcoin. All this narrative, for instance, the bit bonds. The bit bonds are most likely to happen at the state level first to me. Like it would be very easy for Texas, who seems like they're going to actually get approval and a bill passed on Bitcoin. They would be the natural player, or Utah or in Oklahoma. Hey, we need to build a highway. We're going to launch a Bitcoin bond to build this highway. To me, that's where this happens. And we'll have many, many products like that. And that's how we're going to that's where we're going to get the vast amount of traction when we get derivative products of Bitcoin into TradFi's hands.
I just wanted to echo on that as well. You know, they did a survey that was released a few days ago. It was about last week, I believe, from Smerconish, and I'm not sure if I'm pronouncing that correctly, but a recent survey showed that 86% of the people surveyed said no, they were not interested in investing in Bitcoin. And we're sitting here on Discover Crypto, BitLab Academy, Blockchain Basement, Crypto Twitter, and we're all wondering every time there's even a possible bullish headline, why the market isn't just absolutely running away. We just had institutions starting to get the green light to start entering. Only the ones that were on the sort of leading edge of risk really started layering in last year when we got the Bitcoin ETF going live. And yet we're all wondering, because of our circle, how this isn't the biggest topic and the biggest narrative, even with the new administration coming in, why every one of the first things that Donald Trump did, why wasn't it all directly pertaining to Bitcoin? Because this is such an edge issue on most people's minds and all of us, because we understand Bitcoin, because we understand blockchain as the rails of the future. We say this should be preeminently number one, because this affects every industry, every economy and culture, as well as the humanitarian side, banking people that are unbanked, as well as giving that freedom of transaction at a more efficient and a more scalable rate. So I'm very excited about this, but I do think we need to cool our jets on expectation. But I think we have a very, very bullish future ahead.
Yeah, I agree. I think to Gary's point about the no capital gains, and to kind of follow up with what you were saying about cooling our jets on expectations, I think that just sets a ridiculous expectation. There's no way they're going to just remove all of those capital gains. They might change some nuances to the way it's being taxed now. Some of the miners are getting double taxed in and out. They might, update some of the tax code to make it more friendly towards digital assets. But forget about just like, it's almost like people having the expectation, oh, they're going to abolish the IRS and nobody's going to have to pay income tax. Like, guys, that's just a tagline. Like, that's not going to happen anytime soon. And if you go in with that expectation and anything less than that is a disappointment, you're just setting yourself up for failure. So I agree. I think David Bailey said something along the similar lines that we just need to get that out of our heads.
Stop with the rumors.
Yeah, just let it be realistic.
Why would we even want the government to help us in any way? We have literally been raped, pillaged, screwed around, tossed around, DOJ'd, SEC'd, CIA'd, FBI to death. Now we're going to go ask the government, hey, we want you to treat us differently than crude oil. That is a huge, huge mistake. It is stupid at every level. We can literally say we are the only asset on the planet that's never had a subsidy. We want to stay virgin clean on that stuff. I want to pay my taxes, but I want to know that they're equal, they're fair, and they're not being used to kill people. Like, absolutely. That's the question we should be asking. Hey, look, we'll pay our taxes, dude, but you got to stop killing people. Now, you and I aren't going to have to worry about paying our taxes on Bitcoin, because I'm already borrowing against my Bitcoin. This is absolutely happening now. Lending protocols are beginning to explode. That's going to reduce the amount of selling from the whales. There's no reason for the whales to sell now. Contact me. I can help you work through how you do that. But these rates have fallen by at least 100% from a year ago. Mm-hmm. That's exciting, man.
It's huge.
Yeah.
Go ahead.
Yeah, I was just going to say the same thing. I was like, I think we don't want the government to necessarily help. I think the focus that we should be looking at is like, how do we get involved in deregulating the government, which is focusing on again, opening up markets to New York or California that don't allow traders to even buy crypto to this day, struggle to get access to self-custody through Bitcoin, more education
Yeah, I think
on the
that's good, man.
self-custody. Yeah,
I
that's
think
the
that's good, though. No, see, I think it's good that you have states behaving differently, because what people will do is go, hey, I'm leaving New York. Let everybody, it's decentralized. That's the value of the United States. The states get to, oh, no, we're not in agreement with that. So if New York wants to do that shit, like, I won't do business in New York. I don't want to. I'm not going to invest there. Right. So
isn't that a problem though? Like for example, like for me, like if I've been raising for companies and I've been in this ecosystem for now about 6 years, everything I do is almost, if I'm looking or ever focusing on investments, it is going to Dubai. It is talking to Singapore. It's talking to South Korea. I've never once talked to New York. I've never once looked at a Silicon Valley, and it's, the limitations. There's a little bit in Florida, Miami, St. Pete. There's some access there as well with certain capitals that are looking to enter the market. But to me, that's like a problem fundamentally for young entrepreneurs in the States, is that we are right now pretty much forced to look outside the US for better tax incentives, better fundraising for our companies, and et cetera, rather than stay within our own country.
Well, I guess my question would be, problem for who? Problem for us, or problem for the New York, or problem for the US?
I think it's both.
You know what, with that though, considering this election that just took place and how much money was raised and utilized basically by the crypto lobby, and how that impacted not only what we see in the House of Representatives and the legislator, the whole legislative body at the federal level, that sent a clear signal on the mandate and expectation as to what we're doing moving forward. And I don't want to say we're seeing scrambling, but in terms of the slow pace that the government tends to work at, we are seeing in some nature a scramble and very fast activity and moving forward with all the state level legislation that's getting passed, the laws, the rights to self-custody, the strategic Bitcoin reserves on state levels as well on a federal level. So we are seeing a lot of movement. And I do think we are, especially with New York being supposedly one of those financial capitals of the world. I used to live in New York for almost 17 years. And I remembered all the way up until I moved to Atlanta, there were certain coins that weren't even some crazy wild, like Cartesi, or certain things you couldn't do with XRP was delisted before anything else. There was so many different things that were just absolutely limiting. But I do think that the will of the people and the opportunity cost that is here with Bitcoin and blockchain, and essentially the national security risks of not securing this in a meaningful way, really is going to light the fire under our states and federal level to move forward. But what a great conversation. And I'm happy we could have Gary on again. It's been a long time coming. Just for everybody out there, I just want to call out for a second. Make sure you go and follow Gary on his X profile as well. He does a YouTube channel. He does a great series on Sunday, because all of us get so locked into numbers and crypto and making money. Throw that nonsense aside and realize what's your why. Get in there, meet with Gary on Sunday. He's talking about all kinds of wonderful human things that we need to focus on as well, because all of that relates to how you're navigating this market. If you're not happy here, if you don't have good operation here, you can't navigate in these markets. So figure out who you are. I'll let Gary talk more about that, but I know I have to run because I have another content piece I have to do.
Yeah, well, thanks for joining us here today, Kelly. Appreciate having you on there. And Gary, anything you want to leave us with? Anything you're working on that you want people to follow along with? Or
Kelly, thank you, because as I've always said, I can have 1,000 Bitcoin and be an asshole, and I'm just an asshole with 1,000 Bitcoin. So Sunday mornings, 10:30. I've actually named it now. It's called the I Am Church. So anyway, it just talks about trying to improve your life and what you can do, and the little tricks and tips. About an hour. I was criticizing not having a place to go on Sunday morning, so I started one. I think I've done 25 or 26 of them there. It's 4,000 or 5,000 people show up. It's pretty cool. So love to have anybody.
Yeah. Awesome. And I was honored the other day. You called me out as a 30 or 31-year-old guy. I'm like, man, I need to keep using face cream because I'm 41, baby. So shout out to you, man. Hey,
what is that? Beef tallow? You're rubbing it in.
Yeah.
No, banana
tallow
peels.
and red number 40, baby.
Yeah.
Awesome. He's just buying Bitcoin every day.
That's right.
Keeps you young. Keeps you young. Thank you guys for joining us today. So guys, we got a few big speeches going on right now. Type 1 in the chat if you guys are a beautiful DAG holder Constellation live, actually not anymore. Benjamin Jorgensen did just wrap up here. But we got the friend of the channel, Eleanor Tourette here.
Yeah, we could back it up since if there's nothing else right afterwards. If
this one's good.
Okay.
This is going to be the U.S. competitiveness, and this is what I wanted to listen to. This is going to be with Bernie Moreno and Tim Shii. I don't know how to pronounce their last names here, but these are people that I've just seen speak a dozen times. But actually, this is not the right one yet. Hold up. Let me see real quick. We got to go to the DC. This is DC Auditorium.
Yeah, this should be the live. This is not the one.
This is the right one. It is the right one. It is the right one. Yeah, I was like, why is Eleanor? I haven't been watching. I didn't know if she's just hosting.
With public servants such as yourselves. Thank you for the introduction. In terms of the scope for today, obviously the timing of this is significant around the U.S. and securing its competitive position.
It's not the one you wanted?
Global landscape.
No, I hear it.
Stablecoin industry exceeding.
You have a video?
I'm the one. Yeah, I'm running the video.
Public blockchains.
Oh,
over $3 trillion now in terms of.
I had it on my PC too.
DeFi continuing to churn away as is. We have 30 minutes, so I want to make sure that we make the most.
Oh, we got Drew coming up too, right?
The specific questions.
Yes. Yeah, Drew from Blockchain.
Actually, yeah. Let's mute real quick. Bring Drew up because this is going to be a little. I want to do a quick introduction here for everybody that. Just hopefully I give some insight, just some alpha into what I want to see. And we're going to have Drew come up on stage with Blockchain Basement as well. But one of the conversations we're having just there with Gary Cardone, and is, I agree with everything that pretty much he is saying in regards to the future of technology, Bitcoin and its place, Bitcoin bonds, thousands of products. But something that I have been really focusing on and get involved on the policy level, on the state level, now even on the federal scale, is that phrase there that Kelly said, which was New York is the financial hub of the world. That to me is completely wrong. I think New York is the financial corruption hub of the world because it is a capital market a young U.S. entrepreneur really cannot obtain. The level to get into New York's money and that volume and what you have to play to get into there as an entrepreneur within the States, it doesn't make sense. I am never going to go to New York and raise money. There's just no reason for me to, especially start an LLC in New York when I could spend $15,000, get dual residency in Dubai or Abu Dhabi. It's Dubai specifically. $10,000, I think, in Mexico is even cheaper. Singapore, I think, is even free on a lot of different scales. South Korea has tons of incentives. There's no reason for me to look at those as New York as the financial capital of the world when I can go get 4% on my taxes on a corporation built in another country where I can walk into a VC and that day have an appointment and look to raise money and capital for my company. That to me, now I haven't taken money from a foreign VC or capital yet. I've been very, very close to it many different times. And the reason why I haven't is because I don't want to have an investor where I have to travel 28 hours across the fucking globe to get access to that open network. So to me, New York is no longer the finance. It is not what, is made out to be in the movies. Like what happened in the 2000s, even the early 2010s, that is gone. Since 2008, when BlackRock came in and consumed it over the financial crisis, it has become an ultra elitist city that if you want to get access to it, there's ways to, but we need to make effective change. We need to go in at the policy scale and deregulate those guardrails. So young entrepreneurs, where do you go in the United States, right? If you're a young entrepreneur and you want to raise money for your company, especially in Web3, where do you go? I don't have an answer for you. There's little pockets, but it isn't like Dubai or Singapore or Seoul. Like there is way more effective ways to go about starting that company. So that is kind of my focus here. You're going to be listening to that in this blockchain summit here today from a bipartisan perspective is going to be focusing on that deregulation. Anybody you see looking to add more regulation, I'm pretty much going to be against. I want those guardrails to be lifted. I think you as a retail holder should be able to have access to whatever self-custody you want, be able to buy whatever you want, have access to whatever crypto you want, and there should be no central entity or authority saying you can and cannot do this with your own monetary funds. That to me is something I'm against. But Drew, welcome up here today. Sorry for the rant. I wanted to give some perspective just into why I'm so excited for legislation. I know people kind of get like, we don't want politics, but it's like, I am very political and saying, I want the deregulation. I want to build in the United States. I want New York to be the greatest city on the planet again. I would love to go to New York and be like, man, we're making excessive changes here rather than look at a city that in my eyes is just dying to oligarchy.
It's Gotham City now. It's a shit show. It's a total shit show. And I went right before the pandemic happened. Flu season happened. New York has got a lot of fixing to do, but you know what? It is is supposed to be our financial hub. So I do agree with you. It would be nice to see that kind of regulatory clarity for crypto roll out. But honestly, I'm not going to be surprised if the hub of finance is shifted to another location out of New York. And I get it. It's delicious food. It's got some great lore. But really, I'm okay seeing change happen.
Yeah.
It might end up like, this is a crazy take. It might end up in Wyoming. It might end up being focused on Cynthia Loomis's amazing work that she's doing with the Bitcoin Strategic Reserve Act 10 or 15 years down the road, and a massive amount of movement there.
It's funny you say that. They've got to talk today. Wyoming's crypto frontier, stable token, and beyond. That's something they're going to be hitting in this summit a little bit later with the governor of Wyoming. So one of the first crypto banks ever, obviously, was based out of Wyoming. So they've been doing a lot.
And I did want to say, like, it doesn't have to be New York. I just think it should be in the United States. I think we should really focus on building a community that actually is striving for that success. Because there's many different tokenization products that we'll see roll out. I mean, this is just an industry for $3 trillion. It's going to be worth 10, 20, $30 trillion over the course of the next decade. So, very exciting stuff here, Drew. I don't know if we want to pull up the show here. We got Senator Bernie Moreno speaking right now in regards at the conference. Actually, we got a full...
No, hold on. It
goes. Yeah, there you
go. Because we want to lead in this. It's going to be fundamental for the next 20 years, and we want to be the leaders.
Yeah, absolutely. I think the point on legislative stability over various terms, I think, is very important.
Who are these people?
Senator Moreno. Keen to hear your thoughts.
There you go.
Senator Moreno, Senator Tim, Kristen, and Troy here. And they're talking about U.S. competitive right now.
We want to have common sense in this world. We typically think about America as a place where innovation, creativity happens. You're not bound by anything other than your hard work and your perseverance, ... unless you were in the digital asset space in the last 4 years where we were under complete and total assault. I built a group of car dealerships, sold those, and then built a technology company that uses blockchain to digitize the car titling process. Thank God that I did that company before the prior administration, because we needed a bill to go through Congress that said that a digital odometer statement was allowed, that you didn't need to have 3 copies with a wet ink. That was the law. Think about how insane that is. There was a law that says you must have not 2 copies, not 4 copies, but 3 copies, and it has to be wet ink signature. We created that. Had that law not passed, my company would not exist, and we wouldn't have saved states hundreds of millions of dollars processing digital titles. We have to recognize that while we all think we're really important here in Washington, D.C., and we know lots of things, we don't know better than the markets, and we don't know better than innovation that's coming before us. Take the case of stablecoins. Imagine for a second, just step back from all the conversation and say this. There's an existential threat to America that we could lose the world reserve currency status for the US dollar. That's a problem. Well, you have a whole industry that's willing to take your dollar and spread it all over the world and cement the fact that the US dollar is the world reserve currency. Is that good or bad? Like, I'm thinking that's pretty damn good. And yet we've been kneecapping that industry for the last 4 years. So I'm hoping that with the help of my colleague here from New York, who's been a good voice on this, that we get to this very quickly. We get the Genius Act done. We get market structure done quickly. We get a strategic Bitcoin reserve done. And then we learn the lesson that our job here in Washington, D.C. is to create an environment for positive innovation and growth.
Thank you very much. And lastly, but not least, Congressman, I know you've been working as well in the House in terms of the legislative parameters around this space. It'd be great to hear your opening thoughts.
Well, thank you. It's a very exciting time. It's very exciting to me because I keep coming to these thresholds where I say this is world changing. There's this new technology that's always changing the world. I came out of technology. I started out as a research scientist at New York University and did a startup company that I merged with a nascent Yahoo, and we were sure that we were changing the world back then. And you fast forward, I did a lot of investment banking, venture capital, and eventually ran to be the regulator, the securities and insurance regulator for the state of Montana, which was a completely different but very interesting part of this, because now I'm dealing as a securities regulator with the ambiguities of Gary Gensler's SEC in this whole this whole genre, not understanding how to deal with cryptocurrencies and in some ways being hostile. But I'm really excited because the potential that we have right in front of us right now with distributed ledgers, with blockchain, with cryptocurrencies, with artificial intelligence, it's an incredibly exciting time. But one of the things that scares me is the United States of America has always been the center of innovation, the hotbed of innovation. We need to make sure that we continue to foster that innovation here. And a lot of that is how we deal with this on a regulatory basis. I mean, most businesses will understand where you put the bar as long as you're not moving the bar and there's not ambiguity where that bar is. And so I think we need a framework that makes it clear as we start to develop these new industries, I'll say, for lack of a better word, this new technology that I think is going to be game changing economically for businesses. For one of the things that the good senator from Florida mentioned is about
just like Florida.
Did I say Florida? Okay. About one of the things that really scares me is the dollar not being the global trading currency. What happens? I mean, that's the end of the American dream if that switch is flipped. And so having an environment now where we're trying to really figure out how we can be permissive enough to really be innovative here. When I was a state regulator, one of the things that fell, under my purview was the FTX meltdown, and so we were one of the lead enforcement states with under NASA when that was happening, and understanding the need to have, a regulatory framework that invites it to be onshore and something that is still broad enough to make sure that we're being innovative, but has reasonable sideboards to make sure that we don't have another giant meltdown like that. And so I'm just really excited. I know in the House, the Stable Act was just released today, so excited about that. And I think this answers a lot of the questions of what we need to make sure that we have the ability to continue innovating in this space and have reasonable sideboards to make sure that we don't have any meltdowns, and really talking to stakeholders to make sure that we're addressing the unintended consequences, make sure that we understand what that all means. But I think the bottom line where I'm coming from this, and a lot of my colleagues, and I'm on the House side on financial services, across Congress, is really finding that sweet spot where we can be innovative, create this economy driving technology. The administration's clearly behind it, and it's an exciting time for me, having gone that full circuit from a researcher to a technologist to venture capitalist to regulator and now the lawmaker. So really excited to be here.
Thank you, Congressman. So let's go into a bit more detail, right, around the inner workings around how the U.S. positions itself in the global landscape. So first, Senator Gillibrand, you've co-sponsored and championed the Genius Act, and you've emphasized the importance of stablecoins in terms of the U.S.'s financial leadership. So how do you balance creating an environment for innovation that encourages growth while also protecting consumers?
So you want to have the best regulatory framework in the world so that people want to gravitate towards your market. So the reason why New York State, New York City is the center of the world financial markets is because we have very good regulatory schemes for all types of financial services. And we need to continue that tradition. So the most important thing in writing these pieces of legislation is to get it right. And so you want to have it be something that companies can count on, that they have certainty about what the regulation is. You have to understand what the risks are. So for example, let's just say you have a state, I won't give one because I don't want to degrade any state, but let's just say you have a state that doesn't really take financial services seriously. And they decide anybody can be a stablecoin issuer. Joe's Barbecue can be a stablecoin issuer. Sam's Barber can be a stablecoin issuer. Anybody who wants to do it can do it. Well, what happens if they don't actually have a bank account that has $1 sitting there for every $1 worth of stablecoin they issue? What happens if they have a run on their stablecoin and they don't meet the requirements? You'll just have another FTX. You'll have another algorithmic stablecoin that plunges because it never really made sense. That is a huge problem for the US market. It's a huge problem for certainty. So you want to get these regulatory frameworks right. And so what we did was we created 2 paths, a federal path that is very much based on the current regulatory frameworks under the OCC. And then if you have a state pathway, then you have to prove to the Fed that you are substantially similar to the federal regulatory framework so that you can't have a race to the bottom. It's really important. You want to have a state issuer be serious, thoughtful, know what they're doing. We have one in New York that's very effective, DFS. And so you have to do that. Second, you have to think through what are all the ways this could go wrong. Well, something as simple as how do you define a dollar? Is a treasury the same as a dollar? What happens if your one-to-one backing is all in treasuries and you have an interest rate misalignment like SVB just did, and you have a run on your stablecoin and all your dollar backing is in a 3-month treasury that you can't get out of for 3 months? That's a run on your stablecoin. That's a collapse. So you have to have a provision that says someone gets to review what type of assets you have that are representing your one-to-one dollar back. You have to say, what happens if the company does collapse? How do you do a bankruptcy? Who gets paid first? Is this insured by the FDIC? Why would it be insured by the FDIC? It's not a bank. Do you want a stablecoin issuer to be able to issue interest? Probably not, because if they're issuing interest, then there's no reason to put your money in a local bank. There's no reason to put your money in a local bank,
you
who's
lose
give
control.
You a mortgage? Who's going to give the small business a loan? If there's no deposits, small banks can't do that anymore. You'll collapse the financial services system that people rely on for their businesses and their mortgages. So these are the kind of thoughtful questions that have to be asked in advance. You have to write that into the legislation.
Muted.
We troubleshot as much as we could to figure out every scenario that could go wrong, and we put really good.
These people are
reforms in the
terrified
bill.
of the banking industry
amendment process.
getting
senators offered
upended because we don't need the banks to hold all of our assets and lend out against them and make all the money. We can do it ourselves now. That's what DeFi is for. But, yeah,
and I think it's.
I think their fear is why we see
we could do is water it down.
Bitcoin being it's being algorithmically accumulated by BlackRock. They don't want the plebes to understand that these monstrous organizations are stacking while they're like, hold on, we don't want the banks to lose control, guys.
Right.
Okay, calm down.
That's how we keep control.
Well, I mean, we can't have them lose control. It's like that would be the downfall of the US dollar. But there's also like we still have to be cognitively aware that if we like establish stablecoins in that route and it collapsed the financial structure, like millions of people will literally starve. Like we can't have the system collapse.
I disagree. I think the system can change completely. I don't like we can still have dollars. I'm not saying we need dollars, but we just don't need banks.
If the banks collapse, the dollar is done.
They just have to shift. Like,
I disagree.
Because what would be the point if what would be the point
here it is
of the dollar if banks collapse?
No, there will be a point. The dollar with the Bitcoin Reserve Act and a different basket backing it, with this strategic reserve, they can stack 1 million Bitcoin. You think about Fort Knox, but crypto, Bitcoin bonds come into play. The Treasury sells $200 billion in these bonds, buys the Bitcoin with the cash, locks it away in a vault for 20 years. And then this creates a domino effect immediately across the world. Countries all scramble to do the same thing with Bitcoin investment systems. And essentially, Bitcoin, as it goes into maturity, now it's an inflation hedge. Crypto, massive superpower move for the US. This is a US next generation superpower move where they can essentially set the pace for the rest of the world. They all FOMO into their own Bitcoin bonds and then pay a yield to investors in the long term. Like this, it is essentially, if they don't adopt Bitcoin worldwide at the point that the American empire pulls the trigger, they will collapse. So there is the danger there.
I was gonna say, the dollar has been collapsing ever since they got off the gold standard. Ever since they went to fiat, the dollar has been crashing, and they've been printing more and more and more and more. And banks have been scamming more and more and more and more, and holding less of the of actually having anything behind it. They're just giving you useless paper and lending out against it. Now we've got things like Tether, we've got things like Circle. They actually have one-to-one backing on things. They actually have assets. There actually is something behind the stable coins being issued. So you really don't need banks in order to have the dollar work.
Backs the stable coin?
I mean, you have
assets.
treasuries backing.
They're backed
just the US Treasury. Yes.
Oh, and dollar.
Right.
Yeah, right.
So no, it's just the dollar. Like that is what backs 99.9% of
Not
the
a bank.
stablecoin industry, right? So yeah, but the banks run that entire system. So like if
No,
the
they don't.
banks collapse, your Federal Reserve's collapsing. Like this is what I think
We should
needs to
talk about
happen
this.
is I know what I think needs to happen, because again, I would like for that. I think the Federal Reserve is just an artificial entity that should never have been created in 1913. That is why we're at where we are today, lobbying 1971, the whole 9 yards. We can go down that path. But I think the path forward here isn't leaving that system. Like we can't leave the system behind, because there's a humanitarian aspect of that where if the dollar were to collapse, or the banking financial structure, like we're talking again, like she was mentioning, mortgages, every loan, like you're talking hundreds of millions of Americans that are in debt right now. That would be just completely. This isn't a couple of millions. This is hundreds of millions of Americans. This is billions of people globally that their lives would. This would cause probably World War III.
Yeah, but there's a big difference between collapse and replacement. Banks are getting replaced because they are not needed. Technology-wise, we do not need them. Tether came up all by itself, no bank. And DeFi exists, no banks. That's what they're afraid of. They're afraid of the people in banking losing their power. You're not talking about a collapse. You're talking about a transition. Tether and Circle already are replacing central banks. They're
Check out
doing
the
it.
situation with
See,
their
that's
banks
where
are in right
I don't
now.
think they will. I
Look at
think
the
what's going to
screenshot.
happen is you're going to start seeing states tokenize their, like the banks aren't going to leave. I don't think that's a.
Oh, of course they're not going to leave. They're going to fight like hell.
Yeah,
But
and when
I
I
just
think
think
the
we don't
transition
need-
there is
There's a fallacy saying that we need them. That is false. We do not need them for this technology that we have now. Are they going to fight like hell to keep the power that they have? Sure. But just like Gary was just talking about, there are now lending products. You can offer credit without a bank for the first time in history.
So I think maybe the correct wording I should have used was hundreds of millions of people rely on banks.
Currently.
Yes,
They don't need them,
absolutely.
but they rely. So that's where I was just trying to say, like, this is where, and I honestly think it's going to be a state issuance, because like you see all these countries selling off the US dollar, right? Like we're printing endless amount of dollars, et cetera, yada, yada, yada. This is where we start converting all of our state-based systems into tokenized structures that are backed by stable coins. And all of a sudden, New York, California, Texas, Florida become the largest net buyers of US treasuries, elevating the status of the dollar and still staving that economy. Like the banks, I just don't see going anywhere. But at the same time, I think we need to fight and deregulate it in the sense where banks don't control the entire narrative and they don't control the entire sector, if that makes sense.
They're being pushed into a situation where they adapt or die. And there's a reason. If whoever's got the sticks, if you want to show, I got on my screen right now the current situation, and in my opinion, why these banks are cozy enough. This is the unrealized gains and losses Q4 report out of the FDIC, and this is one of my favorite graphs because you see let's talk about this. So the 2008 financial crisis is here, 2008. I don't know if my cursor's showing or not, but you see the 2008 slight movement there. And then you keep moving on. You see that the ebb and flow of this down to up movement of the losses and gains of banks is one of those. It's like a wavelength, how the movements they start off kind of wide and then they start tightening and constricting and getting more extreme. Now we're at that point where we are at an extreme downturn on unrealized losses. And a lot of these losses come from the real estate sector, be it mostly commercial real estate, because of the way that work has changed, the way that we were kind of taking debt and banks were taking debt off of massive real estate locations. Now they're sitting on nearly $500 billion in unrealized losses. Yeah. So, and now think about this. So they have to refinance at least $1 trillion worth of debt over the short term, like in the next few months here. But there's a total of $7 trillion worth of debt that is set to be refinanced this year. So if the Fed tries to keep acting hawkish and tries to keep those rates high, then the banks have to refinance that amount of debt at the current interest rates, which will crush them. This is the chaos nuance that I feel like a lot of people miss when we're talking about Federal Reserve interest rates and their ability to act hawkish or anything like that. And I think one of the best takes that I've heard on crypto Twitter in response to this idea that we need banks is that Aave might end up being the biggest bank on the planet 10 or 20 years from now if they don't appropriately adjust and work with the ecosystem.
And that's what they're afraid of. The DeFi players like World Liberty Fi, Aave, a lot of these things that are coming out that are issuing stablecoins, these are the new banks. These are the banks of the future. And guess what? These banks they actually have backing. They're actually they're not allowed to issue dollars without having backing for them like banks that exist today. Banks today, they hold 0% backing for anything that they get it. So as soon as you give them money, they turn around and that leaves the bank basically the same day. But Drew just showed it. They have massive unrealized losses. They're operating a Ponzi scheme at the highest scale. Yes, we rely on them. Yes, they're and I think that's why I'm frustrated with the narrative that we need them, because that's what they've been convincing people of for the last 100 years. You need us, you need us, you need us. And the truth is we don't need them anymore. They're just so entrenched. They have so much power. They have so much lobbying that they keep control because we allow them to. I saw a clip last night somewhere. I don't know if you guys have ever seen A Bug's Life, and it's the grasshopper talking about the ants.
I love that movie.
One hits him in the head, and he's like, "Hey, does that hurt?" And they laugh like, "No, that's nothing." All right, 2 hits him in the head. No, like, what a joke. I could take these things, and then he just opens up the floodgates, and that's the fear that the banks have right now. That's the fear that especially central banks have. The IMF, they're terrified of this, because for the first time ever, there actually is a technology that has made it possible for individuals to operate on a peer-to-peer system and not need a third-party intermediary to convey and transfer this value. And now they actually have to compete in a free open market. Again, my favorite clip ever is Andreas Antonopoulos, Money is a System of Control. And he talks about how banks have used regulation to build themselves a golden cage where nobody can compete, nobody can get in, nobody can get out. But then they became prisoners of their own golden cage because they became basically a branch of law enforcement. So now they're subject to the executive branch. They have to do everything they do because they're here to enforce the law by, hey, you don't follow our laws, we're going to cut you off from the SWIFT system. You don't follow what we're doing, we're going to debank you. That's what Eric Trump Don Jr. was talking about when we had him on stage. They use it as a weapon. And for the first time ever, you can actually have a banking system that isn't weaponized. It isn't captured by state initiatives. It actually operates in a decentralized way with no third-party rules built on it. It's permissionless. It's accessless. That's the whole point of everything we're doing. That is the cypherpunk movement. There's a reason it started in 2008, like those graphs Drew just showed. And the richest, most powerful people in the world are finally waking up to that reality, and they are scrambling but it's Tether and Circle that did it. They looked at what Tether and Circle were doing, and they said, wait a minute.
And they didn't want
yes, exactly. All these stable coins are getting out there, and people are basically, they're going to open a wallet. 16-year-old, like when you turn 16, you're not opening a bank account. You've been operating online on a blockchain for years already. You've had full custody of your assets. You've been able to get it 24/7. You've been able to withdraw. You've been able to lend. You've been able to borrow. You've been able to do everything that every product that a bank offers, you can get yourself right now with at any age. So by the time you turn 16 and grandma says, "Oh, it's time to open your savings account," it's like, why? Yeah, why do I need to do that? So.
And I love that philosophy. I completely 100% agree with it. And so I think where this conversation is important is understanding, and you said it many times in what you're representing, is that we're fighting the biggest money and the most powerful individuals on the planet. In a decentralized network, more money equals more power. That's just how it operates. That's how you commit 51% of tax. That's how you obtain this control. And so over the last 110 years, 112 years since 1913, where our markets have become entirely reliant. There's millions and tens of millions of people indebted that are indebted to these loan sharks, which you can call the financial institutions. That is why when we approach these regulations, this is what I want to fight for. We need to fight for the deregulation where banks aren't necessarily the only ones that are able to participate within this corrupted economy, like I was talking in regards to New York. But now it's reliant on small businesses. It's reliant on entrepreneurs. It's reliant on giving the incentives to the working class to therefore then allow us to expand within this technological movement. We're going to transition with these financial institutions. We can't change that. You can't get rid of BlackRock. We can't get rid of Vanguard. And if we are going to, again, you're talking World War IIIs. Like, I don't even want to know what the outcome of that situation would be. So as this molds together, we need to make sure that as an audience, everybody participating within this economy, as our channel on Discover Crypto, and you'll see again a lot of things happen over the coming months, is this is a two-party system. And so it doesn't matter if you're an independent or if you're, if you want to meet in the middle on this. When you go make these regulations, you're looking at two political parties that are heavily lobbied against the pharmaceutical sector and against the financial sector. And we're this in between that is trying to cut out all the middleman layer, all the middleman bullshit insurance companies, all the middleman, taxes and transactional costs that are operated by these lobbyists that put themselves into these weird positions. For example, tax lobbying. TurboTax is one of the largest lobbyists against making it harder to pay taxes. So U.S. tax representatives or payers have to pay more to do their taxes each and every single year. They make it harder. We need to deregulate that and focus back into that working class, focus back into that entrepreneurship where these banks, where people don't any longer rely on banks, but banks rely on them. And I think that's how we approach that sector in an elevated way that allows us to see positive growth in the sector. Or else then again, yes, you guys are completely right. We can say, end the Fed, right? I don't see the Fed ever ending. You're talking 120 years, massive, that's not possible.
I don't
if
think
you're ending the banking system, how do we do that, right?
One
That's
thing that you said about we need them or we get World War III, what starts world wars, right?
Banks.
It's usually central banks.
It's banks. It's Switzerland. That's my point. It's like, so if they're
the ones
threaded at that level, dude,
Yeah.
that's what I'm saying. If they're threaded at that level, they're going to go print money and cause, again.
Look what they did anyways. They're in operation. And that graph that I showed in 2018, the banks fell into that $100 billion realm, which they did not see during the housing crisis. During the housing crisis, they fell to like 70 bill. Their losses were deeper right as they decided to roll out the NIH development of what shut down the entire world economy. And then they had all the reason in the world to print double our supply in dollars, crush the average person. Now people are literally having to take loans out on groceries. They're having to put groceries on credit to keep alive. Now we have half of the country is spending either 30 to 40% of their entire month's pay on just rent. Rent is at all-time high. It's at $2,000 on average for the average rental.
The illusion that banks don't want people to realize is that their system is failing. It is failing. Just, you can look at that graph. It ain't working, and it hasn't been working for a long time. And they're trying to tape it together. They're trying to print more. The Keynesian economic system is a flawed, failed system over time, and it's been proven and proven and proven. And they try to keep it going, but eventually, it's going to have to go back to the Austrian School of Economics. That's what Bitcoin represents. That's what we're doing right now. I think this transition is inevitable. I think I'm not saying the people that are powerful now won't be powerful in the future, but they will have to adapt to do it. We've been co-opted. All of the wealth in these United States has been slowly extracted since the Federal Reserve came back in. There's many presidents that have spoken on this. Almost every single one of them that tried to speak out against central banking, it was either assassinated or had an assassination attempt, across the board, just like what just happened to Trump.
Even though they're able to assassinate presidents, you got people out here that think we're the dingbits. That's my point. You brought up a good point. They have assassinated a sitting U.S. president. And you think us as just civilians are going to be able to be, we have technology more than once that we know of, that we fucking know of. So that's the point here. It's like when Switzerland was in World War II, they're like, oh, we're going to fund both sides of the war and just elevate it because we're going to make so much money off all that interest.
My argument is we do have the power now because the main difference is the internet. And they can't control information the way they could in the past. They can't control data in the past. And we actually have a system where we can send things back and forth. And the internet was one of the greatest decentralized ecosystem. I'm not talking about Web 2 that most of us experience. I'm talking about actual data packets going back and forth. For the first time ever, people were able to do that. And they've been playing catch up ever since that happened. They can't stop X. They can't stop the free speech the way they used to because of things like X. They can't stop money transfers the way they used to because of things like Bitcoin over the internet. So yes, it may not happen in the next 5-10 years, may not happen in the next 50 years, but over the next 50 years, I think we will see a complete transition and a complete updating. At least that's what I'm advocating for. That's the whole fix the money, fix the world premise. I hope it happens. I'm not guaranteeing that it will happen. I still think the people that have most of the wealth, all the people that have all the gold, inevitably we will end up sitting on all the Bitcoin. They will still custody it. They will still loan out against it. Everything will be a derivative of Bitcoin and gold, in my opinion. That there will still be products, but I think there will be much different than brick and mortar stores that we see today. And those who adapt the fastest win.
And you said it right there. You're like, it's the banks make it the illusion that we need them. And I think that's what we need to fight for, is and make the banks understand that they need us. It's 100%. Our money, it's our capital, it's our hardworking payments. And that is the fight that we need to have right now if we want to keep the decentralized status that we have within our markets currently today.
It's a culture war.
Drew, I'm going to let you take off here, and then because I got to use the restroom real quick. So just lead in if you want to pull up anything, go for it.
This is the culture war, man. It's like for hundreds of years we've been beat down, and the mindsets cooked into this moment where, you know, we think that we rely on these systems when really it's the peer-to-peer trust and what's acceptable on a cultural level, which is how we handle money. And you know what is the proof of, and the proof of reserves and the proof of bill that Chainlink is rolling out? I got this on my my screen right now if you want to pull it up, but we have a kind of a confluence of things happening for Chainlink. I'll scoot down so this is nice and good. Chainlink dropped a bombshell. They're teaming up with lawmakers currently in DC. That's what they've been doing for the last few weeks on the proof of bill. This is going to force.
Can you resize your window for me? Like, pull it in.
There we go.
Keep going. There
There
you go.
There it is.
There you go. Right there.
This proof of reserves, man. It's like, because TJ, what you said, that, you know, on March of 2020, they went to a 0% reserve requirement in banks, where they literally have to have nothing tangibly in their possession to continue operating, which is a dangerous place to be. And now this link adoption, I mean, if this proof of bill moves forward, link adoption might be mandated by law. So when I see this, and this is my Pepe Conqueror, of course, because this is Link conquering the blockchain right now. These are the top projects with the most active developers for the last week. And these are some really interesting projects that I've always kept an eye on. We got Chainlink here in the GigaChad top spot. We got EigenLayer, DeFi Chain, and a bunch of interesting things going on here. Just Decentraland apparently still trying to stay up in the developer activity, but most of these are DeFi applications, and then Chainlink. So when I'm looking at, I'm a long-term investor. I don't like kind of, you know, focusing on my portfolio day in and day out. I like looking for something that's more sound, and Chainlink and Ondo with Josh, your attention and focus on Ondo, I think, is very, very important for people to understand the tokenized treasury system, like the BIDL program that's being built out. I think that what's happening right now, and what I kind of talked about, this black hole being created from what's to come, Bitcoin bonds, is absolutely insane. And then we see Aerodrome, right? Vet, I got your, I think I have Vet's original post, but this is from Aerodrome on my screen here, partnered up with Chainlink and HackBG to further automate and decentralize weekly protocol operations, setting up a new standard for DeFi infrastructure. Aerodrome integrating with Chainlink, and, you know, really the Aerodrome dominance conversation is something that we've been talking about on the blockchain basement for about 2 years now. It's like, we originally were like, somehow Coinbase is going to capture Ethereum. Somehow. We don't know what it's going to look like. Then they rolled out the base ecosystem, where you can operate and utilize the infrastructure of Ethereum, still technically on it, but you lower the gas fee within it. So then I start branching out, instead of my basic Ethereum bags, to start messing around and finding different DeFi protocols or different things that are just being built on base to find good upside. And it's done very, very well for me. You know, some of the best movers in the portfolio have been base ecosystem plays. We got Constellation has been extremely strong over the past pullback. It's still trying to magnetize near 5 cents, which is incredible. We're still like a flat, like 3x from where we ended up getting into it. Moonwell, though, looking pretty decent, but Morpho.
All right, wait a minute. I gotta address this soy DZ Chrysler 300 guy. Sorry to interrupt you. He says, this dude's such a liar. No way. He's been talking about Aerodrome for 2 years in the basement. Bro, we were talking about base before it launched.
Exactly. That's what I'm saying. It's like
we've definitely been talking about it since before it was even a thing. And if you want to go check. I think it was January 2022 is when we started doing the basement, and we were talking about it almost daily. So.
Yeah, absolutely. Because me and BJ were like, somehow Coinbase is going to capture Ethereum, right? And so then Base came out, and then within that, then I saw Aerodrome. I immediately bought Aerodrome.
Yes, base and Aerodrome, buddy. Like we immediately called it because it was the Uniswap. Like I can't handle these people. Get out of my face. Come on.
I mean, sometimes people can't stand. Well, it's understandable. Some people don't like me. I'm an imposing figure. I understand, but Morpho, this is the kind of easiest user experience lending option from Bitcoin to USDC on Coinbase. And so Coinbase being kind of like the king of user interface, this is where that kind of play came in. But these have been, honestly pretty beautiful. I added to the position when we did fall into that recent trench. I think it was like $1.10 or something. I just decided to add into the trench. I had to wait. I got in here and then here. I'm a patient DCA'er. I'm not necessarily a DCA'er, but I pared down the portfolio pretty heavily in the last pullback. And essentially now it's made up of majority Chainlink, still Chainlink Maxi. Right behind it is actually Ondo's second biggest, Aerodrome, and Aerodrome is still sleepy. I feel like adding more Aerodrome from where this thing's sitting right now. 50 cents is my historical buy point. I did add in the trench. Kind of very, very grateful for this massive pullback in general, because this is like, you get aggravated when you have a good amount of crypto, but then this thing is mooning, and I just have trained myself to not buy giant green wicks. Even though I know it's a good project, I don't know where it's going to tap out or where it's going to find that recentering moment. This is clear as day, a recentering moment for me looking at this chart. I know people love memes. Let's look at the best meme I think that's out there right now. It's Pepe. It's Pepe. Okay. Now, I'm not too degenerate. Pepe, this thing looks absolutely beautiful. And I think that Pepe and Doge are like, and then, Trump token's probably going to be around to agree. But these are the things. I don't own any Pepe, but I know people are out there messing around in the meme coin sector. I don't think you can just pick any meme coin that recently died and expect it to come back up to its previous glory. We have to be careful about that. So in this past pullback, I've really pared it down to projects of tangible value, of use case value. And that's where my mindset, because I was speculating, made some good moves like on Trump token and all that. But it is a time where you know what, TJ, I screwed up. Did you get into Athena yet?
Yeah. I have some. Yeah.
I missed it. And now it's sitting here holding over $1 billion of BlackRock BUIDL tokens. This is one I don't have on my portfolio, but I felt very strongly that it's going to be a performer. Maybe I should end up getting this one next.
I think it's at a decent price now. It came back down. It came back down a lot from where it was. So, looking at those in that BUIDL fund, I was looking at a post earlier today. It's absolutely exploding in value. I don't know if I have it up anywhere I can pull right now, but yeah, seeing what's going on with stablecoin, seeing what's going on with RWAs, we're seeing a massive explosion in value and a lot of really good stuff coming from that regard. So yeah, pumped about the future. I really am. Every day believing more and more this is going to be a super cycle. I think it's going to be an extended cycle. I think it's going to take a long time. It's going to move slow, but there's huge things coming for crypto.
Yeah. And real quick, guys, I just remind everybody, let's hit that like button. So if you guys don't know the rundown of today's episode, guys, lock in, get some food. This is going to be a massive day. We're just getting started. It is now 1 p.m. here, so we're about an hour away from when this conference starts getting really juicy here. We have debanking or global crypto leadership here at 2:35. Richard Tang, the CEO of Binance. We're expecting some alpha to come out of this at 2:35 p.m. Right after that, you're going to have the Bitcoin Act, which is going to be digital gold and U.S. leadership under Congressman Nick. This is huge for Bitcoin specifically, but right after that, okay, Bitcoin is a strategic reserve. We're going to be learning about policy adoption in the future with Cynthia Lummis and Michael Saylor, followed by at 3:40 p.m. Bo Hines, the executive director of the Presidential Council of Advisors for Digital Assets in the White House here. So they're going to be covering the first 100 days and pretty much the future there. Past that, you got Hester Pierce, then Senator Ted Cruz, Tom Emmer, and Sergey Nazarov with Chainlinks all the way at 5 p.m. Depending on how excited you guys are today, and if you guys like these long streams, I might be here till 5 p.m. So just hit that like button. And I will be taking polls throughout the day to make sure that you guys want us to be live here covering this full event, giving you guys the breakdown, giving you guys that moderation. And that looks to be kind of the one that I really want to watch today is going to be a Sergey Nazarov at 5 p.m. here. And then, of course, it starts. I think that's the end of it. That's the closing here. It's closing with Sergey at 5 to 5:20.
And I think he opened it too. He was on first thing this morning when I was looking at it. So he might have opened and closed again. Chainlink really set themselves up well. He's literally at every important conversation, and he seems to be the keynote speaker that everybody's talking to. So happy that Chainlink is one of my largest bags. Hasn't had a lot of price movement recently, but I do believe this is a long-term hold. I've been saying since the bear market that outside of Bitcoin and possibly Ethereum, Chainlink might be the only other coin I will hold that I think is this automatic long-term hold.
That's the same for me, man. It's like and when Sergey was talking at the original Trump hosted crypto summit at that big roundtable, he wasn't talking like some hopeful speculator that had built this product that he just wants to, hey, look at me. He was talking with the gusto and the surety of someone that was already plugged into the incoming system. And now we see this proof of bill coming out. I mean, there's a reason why I'm a seasonal Chainlink maxi. I'll be back to a Bitcoin maximalist after, this altcoin pop off is done. People asking why glasses, these things are actually talking to me, giving me messages as I'm talking to you guys. Just on stuff. I stay up to date with a lot of stuff. I do a lot of stuff.
Yeah, Drew's got his AI assistant in his glasses, and he's also video recording everything all the time. So,
oh yeah, dude, these are great. Look at that. So you get a little light, and this is a great body cam in case if I get any FAFO action, then I can just turn the thing on, put it down. Looks good for the judge. Everything's good to go. So there you go. That's why
he's Drew's been living in 2030 since 2016. So that's how he knew Aerodrome was coming 2 years ago, because he's deep into this stuff. So. All right, I will leave you guys to cover the rest of this. Josh, you may want to pull the video feed if you need it from your side, because I've got some other calls I have to take. But I will pop back on here shortly, and I know I will leave you guys leave the audience in the very good hands of YouTube. So
heck yeah, dude.
Hell yeah.
Real quick, give me 2 seconds.
Yeah. There's so much stuff to cover. I'm super excited to see. Two of my favorite projects are talking today. It's Chainlink and DAG. Unbelievable. Now, the other stuff I wanted to cover is the Core Wallet is covering C chain transactions for free. Avalanche, I still remain bullish on. Avalanche is like my closest gaming play. I do feel like adding WAGME to the bag, but Core Wallet covering C chain transactions for free. Nice to see for me. I am speculating on this too. Dagnum posted having a good conversation with Charles Hoskinson. Maybe a ADA DAG partnership, mayhaps. Bring
what
me
are the comments there?
Let's go through them.
I think he tagged me in that one.
I did. Oh yeah. Where is that comment? Someone makes you. Is this your dad, Josh?
Yes. Someone asked if that was my dad, and I posted the chat image. Dude, I'm not gonna lie. He looks like my dad.
Yeah,
pretty closely. You were to see minus the hairline, but
dude,
he's a handsome guy, dude.
Just give me a side profile real quick. Other way.
I gotta get
there it is. I mean, I would say that's pretty uncanny. If someone asked how much these glasses are, they're like $300. These are the first expensive glasses that I bought, and I consider that expensive.
Well, I have to wear prescription, so all my glasses are expensive. But now I try to go on discounts.
Dude, you can get these prescription with clear lenses. You can be.
Oh, shoot. I go on that Black Friday deal, and then now I got that 30. These cost me $30 every time I want to replace them because I got the insurance.
I know we're multi-streaming on Discovery, but guys, this is interesting to me. The Secret Service is going with 6.5 Creedmoors now instead of the 308s, it looks like. So that's interesting.
All right, we don't talk about guns here.
Okay, fine. Well, you know what? We'll go back to the.
Speaking of guns, we got Sergey Nazarov flexing on the XRP community here today. Let's actually listen to this. This is huge.
Yeah, let's go back to it.
Oh, it's only the 7-second clip. There's a bigger
the proof
one
of bill that we're working on with a number of other legislators and their staff and other groups here in DC.
So he's not talking like some hopeful, you know.
I have the full clip here if you want to watch it.
Sure, absolutely, because this is literally like the ground of crypto is being built in front of us. Let's have a listen to this.
And our work on proof of across different asset types will really allow for the most reliable assets to come out of the U.S. financial system. And just like the U.S. legislated into existence risk agencies, we think it should legislate into existence this proof of bill to make sure that the financial products generated in the U.S. system are fundamentally better and fundamentally more reliable because they require this high level of proof of information. And this goes very well and in line with the current model of what makes the U.S. financial system reliable, which is highly reliable assets with a certain level of regulation and information requirements. This is basically just continuing that, but doing that in an on-chain way that massively benefits the consumer, the market, and eliminates systemic financial risk. So this is what we hope the work we're doing now on the proof of bill will help us achieve.
Yeah, that's insane. That's actually, this is how you get involved. Like every financial institution could be running on Chainlink because they have to have the proof of reserves that they've created through their systems.
Right.
That it's a massive flex here. So for anybody that doesn't understand what that means, requiring all stable coins and real world assets. So this includes real estate, this includes natural gas, commodities, etc. To have a proof of reserves, and of course, they says it will literally be the law to use Chainlink. I don't know if it'll literally be the law to use Chainlink, or if this will be more like Representative space out on his name right now. What was his name again? Why am I spacing out on his name here? I'm going to say it. 3 seconds. It is Moreno from Ohio with the car company, right? He built the blockchain digital. He had to get a bill passed that way he could actually launch his company. This just puts Chainlink at the forefront of that. So you're looking at not only that, but Chainlink being, helping with advisory with the Digital Assets Council, talking directly with Donald Trump at the Crypto Summit. Chainlink's in a very prime position and just makes me, dude, I look at the Chainlink chart all the time here, and it just makes me, dude, I want to accumulate as much as freaking possible. Like if we lose $15, sure, maybe we come back down to $10 one more time or something like that. I want to be buying as much Chainlink. I wish I bought more, dude. We were accumulating so much at $4 or $5. I wish it's just one of those plays, dude. It's like, it's going to be a slow burner. I don't expect it to go to $100 a cycle, but I'm expecting all-time highs. It blows my mind that Chainlink isn't valued at like a $60 billion market cap company right now. They have some more application than most crypto out there.
I know why you would think it's not going. It's just, I think we forget how fast things start moving in the final few months of altcoin speculation. And like, the CCIP Swift connection and actual tangible, CCIP payments from Swiss transactions, not supposed to happen until Q4 of 2025, right? So we're not even going to see that, but the speculation moments for crypto at large, they are condensed down to just a few insanely exciting months. So I understand why your sentiment is that, and you have a conservative approach, and it's reasonable. Me, I know how fast and how overextended this market can become in just a few months' time. And that's why, like, I recently did add more Chainlink when we hit $13. We're talking about like this, Chainlink being right in front of Trump and US legislators as they're rolling this out. I think it kind of plays into Trump's executive order that he just signed, enabling the US Treasury to modernize its payments in the system of its payments to reduce the fraud, waste, and abuse. But this is, the proof of act, if that Sergey is working on right now. It's not necessarily that it's going to become illegal for you to use anything besides Chainlink proof of reserves in the future. It's just if you want to involve yourself with the American economy in 5 years, 10 years from now, if he does move this bill forward, that actually is a tangible potential. So that's where the crazy part about this, the king has returned in terms of crypto. And that is, you have Satoshi, and Sergey is right behind him, in my opinion. Like, this is Bitcoin is the ground of which Web3 is being built upon, the proof of like the value and where the value lives on the ground. And then the smart contracts, the buildings and utilities. Chainlink is the transportation communication railways that have been built between the current existing system of Web 2 to then communicate over to Web 3. And me as that's my building metaphor for what Chainlink really is. I have to emphasize these things because we sit here aggravated that we're sitting chopping at whatever, $80,000, $90,000, while there's so much insanely bullish news out there. I think people have become desensitized to it. There's a reason why prices aren't ascending when we see BlackRock adding, however many billions of dollars in a day's time through the ETFs, because they're using Coinbase algorithms to purchase it. So as long as the Bitcoin price chops, they're able to use those algorithms and purchase the Bitcoin without creating some green god candle, which everyone expects from all this bullish news. But once, supply hits a certain level and once the chopping stops, then it becomes unnoticeable. Like, it's something that we're in this time frame. And chart wise, I may as well pull up TradingView because I have noticed some things. I highlighted it on the basement a few weeks back. I still feel pretty strongly about this. So I'm going to pull this up. We're going to pull my fib. Let's see. I'll share this tab instead for Mr. Aaron. God, Aaron's good. Aaron is a good one. So let's pull the fib. And I'm going to do it just an entire cycle, high to low fib on our current situation. Okay. So this is our stumble point. These are previous.
You're on my screen.
Oh yeah, pull up my screen, Aaron. I
got
it presented. It's got the rainbow on it. So we got the previous all-time high, 69K. We fall down, create this little nutsack pattern here at 16K.
Excuse me?
You heard me. Now,
Nice.
what we have, the previous all-time high was captured before it should have been. Like the halving, we accomplished this previous all-time high before the halving. So we chopped for a very long time and really kind of psyoped a lot of people out of the market. They thought, yeah, that's it. We had the ETFs. I'll delete this. Hold on. So where we're chopping right now, and we're finding a stumble point, is at the 1 to 1.618, the blue zone. This, in general, is mirroring a diminished returns in terms of Fibonacci extension to cycles past. The reason why I say that is this. So I'll go to historical timeframes now, and then let's pull the fib from this cycle. And I think this makes perfect sense because as the market grows into the multiple $1 trillion realm, it gets harder to move $1 trillion ball than a 10 or $100 billion ball, just in those terms. So keep that in mind. So we have the previous all-time high. And as I said, it was not normal for us to accomplish this all-time high before the halving. Historically, we hit that all-time high after the halving. We have a chop zone where things reestablish themselves. People that were looking for that previous cycle all-time high taking profits. You get that generalized chop, which is normal. And then we skyrocketed to this zone. Now, we chopped and had a 30% pullback at the next leg up in the fib, which is the 1618 to 2618. But instead, this time, we look at this current situation. We have the same level of pullback right around 30%. What is this? Yeah, it's like 30% on the dot, damn near. Wow. Right at the level below that. So in why I'm saying this, long-witted TA, is because I think as things sit, as the velocity sits, and as these market makers can still use algorithms to do these buys for institutions like BlackRock and all that stuff, I don't think we should be watching for this range anymore. I really don't. I know that I said it was possible because we had the Bitcoin Reserve Act narrative coming into play, and it didn't know how long it would be until the actual US government started buying Bitcoin. It looks like it's going to take till 2026, 2027. I really am watching out for a tap out in this zone from the 170 to,
my God,
if we're extra lucky, 200. I'm being conservative on this. And I'm telling you, this is accounting for a strong diminishment in returns cycle over cycle. This is what I'm trying to emphasize. We are stumbling at the same rate of a 30% pullback, and the same time frame. The crazy thing about this, Josh, is that this pullback, this 30% pullback, which looks like a pullback for ants when you're looking back at it, this happened in the January, February timeframe. Okay. This same pullback that we're going through right now, it's got everyone so shooken up in 4-year cycle terms, smack dab on time. It came at the January timeframe. You get a 30% pullback. So this is where I'm looking at, and something that I love. I don't know if you and DZ dive into this much, but let's pull it up.
To the star trade, someone said any traders today. I'm actually in an open trade right now.
Are you?
Yeah, I'm just in a short on Ondo. Just little trades here, just throughout the stream here. We're up about 13%, a couple $100 here.
Nice.
But that is going to be, yeah, if you want those signals. I forgot that we're going to be live all day here today, so I'll be trying to make trades throughout the stream here with you guys. But I mean, really what I'm watching for, because I want you to pull up everything you're doing right now. I just wanted to cover this.
Yeah.
I just want to remind everybody that the futures gap, I still expect this, like, play your futures gaps. Like, we have a futures gap down to 84.38, and then the SPX also futures or just a huge gap down to 5669. So I want to be I'm expecting this to fill, at least in the short term. So if you guys are trading right now, just make sure you're just taking advantage of those scalps and just kind of be cognitively aware of those price movements. Ondo's looking pretty good though. A few of these projects are looking good, but Ondo I just traded because it's just easy to it's easier to short. Especially what's interesting to me, dude. What the f is happening with Ethereum? This trading channel is disgusting.
That's
this is
the base capture,
daily.
man. That's the base capture that I'm talking about. It's like
it's absorbing it, dude. ETH is Justin Sun's right. Like I think he needs to listen to Justin Sun and even what do you call it, Richard Tang. It's like, dude, if ETH loses this level, it's just another bear flag to start to form. It can go down to $1,500, and it's like it could do that while the rest of the market's still moving. It's Ethereum is one of the worst performing assets on the market, and I'm bullish on ETH. Don't get me wrong. I do expect some upside action here, but this is what makes me really kind of skeptical of the upside targets that people put of like 10K ETH in this cycle. It's like I think Ethereum's even gonna have a harder time. Like this $4,000 level. Look at this on the daily. It is just massive resistance now. So just be very cautious if you guys are ETH. I think ETH's great to hold if you're looking for a long-term swing, but yeah, not looking too hot on the daily there.
Well, in my mind, I think I know what will get it to that mega pump moment again. It's staking of being available on the ETFs.
Wouldn't that just create more selling pressure though?
I don't think so. No, because if
you're staking, earning yield off ETH, aren't they just gonna sell that ETH?
I mean, if compounding, I don't think so, man. I don't think that it looks too crazy or too volatile of an asset for them to be just running away with it. I think the moment that Wall Street realizes they can just earn yield through the staking on it, I think that really helps it. But in terms of when I think the top comes, I'm still thinking November. And a great metric for anyone that's out there that's like wondering what tool can you use at home to keep an eye on the market so you don't have to listen to me and my AI glasses or Josh and his fantastic haircut call when the top is in. It's the Pi cycle top indicator. Pull this up if you can in the back, Aaron. At the Pi cycle top indicator, you can get this on CoinGlass, a bunch of different things. Pi cycle top indicator, it basically is the 111-day moving average paired with a 350-day moving average times 2. And when these cross, then you have a pretty clear signal that it is the top. So right here, I'll zoom in. It crosses beautifully back here all the way in 2013. Perfect top call right there. Then you have the cross here in December of 2017. Another perfect top call from the Pi cycle top. And then you fast forward to 2021 and again, a perfect cross at the moving averages. So right now where we sit, kind of zoom in on this, we have plenty of room for activities on Bitcoin. And that is where I feel like this generalized target and time frame is still very, very valid in my mind. We have all of the narratives, all of this, crypto is clearly here to stay. If we had Gary Gensler, say, still in power, and we had Operation Choke Point 2.0 still going in full swing, then I would earnestly be concerned about the cycles having the ability to repeat, because now you're in the multi-trillion-dollar asset class, and I'd be worried that we wouldn't have enough gusto to even get into the purple zone. But with all these things going on, the narrative of crypto is not going away. I do still feel like this, Josh, that we could be looking at this $170,000 to $200,000 Bitcoin, and then all hell breaks loose, because in my opinion, once we break into the 120 and beyond range, then people that got into Bitcoin in these lower ranges right here, they're going to want to earn yield on that Bitcoin. And that's where that DeFi summer insanity starts to kick in. And that's where, I see products like Morpho just absolutely going ballistic. It's because people want to protect the gains that they have, but they also want to continue earning yield on it. So there is something to think about there.
That's where I'm at. And that's why I think it's going to be hard for the stake. So, and like, I could be wrong. Like, we can go to these ranges, but for me, like, if we're at 120K to 130K Bitcoin, that's my outs. I'm probably going to liquidate the majority of my assets and actually roll it into stables and start earning yield, and just use all of that yield that comes out from an APR and just buy Bitcoin, buy Bitcoin,
Sure.
buy Bitcoin, buy Bitcoin, and then wait for the next major dip again to run. I mean, it depends on like alt seasons and everything. Also depends on just the like, obviously we have to look at the economic data points, but if we start seeing market exhaustion again, if we start seeing, euphoria and hype that we saw in November, it's just, at this point, I'm going to be looking for a clear out that's more sustainable and risk adjusted. And I think that's something people need. And obviously, I'm in a different position than we're both in different positions. Chat's in different positions. TJ's in different positions. So people have different market strategies. But the risk adjust factor to me is like, if I can put a few million here into stables and then just earn a very easy yield off that, and then just use that yield that's tens of thousands of dollars monthly to just rotate back into those assets, and I can even borrow against that. I could rotate those assets in and borrow against that Bitcoin at lower lows. I think that is a very unique strategy approach into this next market trend, because it's going to be interesting. Like, I think there's also a case to be made that like Bitcoin, and I know, guys, we're going to get to the governor talking right now from Wyoming in a second. There's also a case to be made that Bitcoin does break out this cycle and Bitcoin actually goes to a 150 or a 160 or 170. And altcoins, while the liquidity makes them move right by 2-3x, they don't really perform. That we don't have that risk on adjusted factor because retail doesn't have the spending capability that they did in 2021. We don't have the stimulus and the personal savings rates at an adjusted factor where debts are lower and interest rates are lower. They're max credit cards. They're max debt. These are people that are living paycheck to paycheck and are being forced to save again. So it's also going to be interesting to see how effective Doge could be, how effective Donald Trump could be in terms of tax cuts. Because if you guys don't know this, Donald Trump could sign as many executive orders as he wants. 90% of them aren't even going to take place. It's very going through Congress, which is the House and the Senate. Once an executive order is established, it doesn't mean it has to actually go through. There could be years, if not decades, or even Supreme Courts that, not decades, but well, it could be decades, where Supreme Courts get involved as well. So we have to just adjust to that new fiscal and monetary policy that will be created. But something to think about here. And if you got anything you want to touch on that, you can. But we got the governor of Wyoming speaking.
That's where you can't just throw a dart at the map and hit a 10-20x in this cycle. Not like last cycle. Just because it's an altcoin doesn't mean it's going to, like, you have to. That's why I pared down my portfolio to truly valuable projects that had clear use case and a lot of users and good positioning. So let's go to that governor though. Check him out of Wyoming.
The conversation that launch status. So I joined 18 months ago, and almost to the month, a year and a half, we're talking about an imminent launch. We've said that we're going to partner with Layer Zero. In terms of the status, would you like to say just a couple more words about just the procurement process along the way and how we've done that in again, the public square? And then I'm happy to share some more details about the test tokens we have live already.
Yeah, why don't you do that? But it was kind of fun. And before you do, I just want to say, the idea came around. I vetoed the first bill. The second bill came along. There was a lot of impatience. I used to work for an oil and gas company, and our moniker was urgency. And so there was a real sense of urgency around that. But we wanted to make sure we got the foundation right. And so for a lot of time, people were saying, gosh, you guys aren't getting anything done. Oh my gosh, you just had meeting after meeting after meeting, had a lot of public testimony, a lot of different people pulling in different directions. But I think the staff and others were like a duck. I mean, it was just paddling along. So then that's the foundation for you to be able to talk about what was able to be done in a very short period of time.
Yeah, certainly, and thank you for that. So To give the group a little bit of context here about how we've gone about this process, it's important, as the governor's mentioned multiple times already, for us to operate in an incredibly transparent manner, to put all of our determinations public. And that started as far back as a blockchain selection exercise we did in the fall of last year, which is an interesting departure from the state's procurement processes around requests for qualifications and proposals that you're expecting a vendor to respond to. Well, a blockchain is not necessarily going to respond to an RFP. You can't send an RFP to Satoshi Nakamoto for Bitcoin, right? So we had a evaluation committee comprised of commissioners, subject matter advisors, agency resources that did a robust and objective blockchain selection exercise, the results of which are currently on our website, and we're actually entering round 2 of that because we do have a mandate from the state legislature to be a multi-chain offering. So we are going to continue opening the pipeline, the funnel as we go. The second round, an update of that exercise is available on our website. So if you're interested in that, please take a look. And then dovetailing off of that, we've also gone into a request for qualification and request for proposal. We've done 8 of those simultaneously in parallel, which has made for a lot of sleepless nights, but well worth it. And we are at the point now where we are negotiating with the vendors that we find to be qualified. And that's, when we say that word, we really are talking about groups with, the phrase we keep coming back to is existing and demonstrable capacities. We have a small team, a small budget, and the goal is to leverage the work of those who have been there before, but put it together in a kind of a unique package that only a state can do. To that extent, again, we are very excited to announce that Layer Zero is the first team we will be partnering with. We are leveraging their omni-chain fungible token standard to be potentially on multiple chains at launch. Of course, we'll definitively have to launch on one to start, but the goal would be, again, to be multi-chain sooner rather than later. We do have test tokens currently on several different blockchains. Those would be Ethereum, Avalanche, Solana, Polygon Base, Optimism, and Arbitrum. And I'd like to thank the Layer Zero team personally and on behalf of the commission for the absolutely rapid turnaround in getting that done with us so we could socialize that at today's discussion. We are a state in the capital of the nation. At the federal level, they're working on stablecoin legislation, and we might just get there first.
Yeah, I think it's going to be really exciting. And then, for me, one of the things is, as I said, the back end, making sure that we're there. 102% is our minimum for the reserve balance. We're working to see what the volatility is that we need to perhaps address, and we're trying to make sure that we have the structure correct around all that. That conversation is ongoing. It's been fun, and I'll just tell you the evolution of thinking in Wyoming. I'm a rancher by background, and one of our neighbors who happened to be a legislator a few years ago was saying, I don't know if I like that blockchain stuff because it's chains hooked to blocks and they go from here clear to China. And now today to have it's almost like we've had too much success because, and we'll look at this too, but all in good time. Now people are talking about, well, maybe we can do something backing it with petroleum, or maybe we can do something backing it with gold or silver or some of the other things. So I think there's use cases are beginning to multiply. But for us, it's been about making sure this is a utility. And I can remember talking to a couple of the members of the FDIC years ago because of this debanking issue that is so frustrating. It was, the rest of the world's going to pass America by. And not that a little state like Wyoming can make all the difference in the world, but we sure can start the migration of the investment in our bonds back into our country. So we're hoping that by backing this with short-term treasuries and repos, et cetera, that we'll be able to demonstrate not only the liquidity necessary to meet any kind of volatility calls, but also just the practical implementation of this as a tool, and maybe have America once again way out in the lead, protect our dollar's hegemony. Those are the things that we're really looking for.
That's what it's all about, protecting the dollar's hegemony.
We talked about the utility. Is there any particular use case you're excited about for the stable token once we have that live, beyond just the payments and keeping different rails? And
well, I think it's an incredibly valuable form of settlement. So payments, all that stuff are terrific. I think we've been very cautious, and let me just point this out. In case anybody didn't notice, the last few months we've seen a change of administration, a real change of perspective on this. And Wyoming has really wanted to demonstrate the utility of this coin across multiple platforms, not coin, token, across multiple platforms, regardless of what prevailing winds are in Washington. And so we're going to continue to try to find use cases that benefit. I mean, there's things from energy. Wyoming is, we export 12 times more energy than we use. 65% of our energy goes out to the West Coast. We have all kinds of digital data centers, AI, other things coming to the state. This is a wonderful way maybe to start figuring out how to do settlements on the power curve and other things. It's just, there's an enormous use case opportunity out there that we want to be part of.
Absolutely. And one thing we should certainly mention, because I don't think it's come up naturally in the flow of conversation here, is when we look at these use cases and we have a stable token, we're backing it with T-bills, those dollars that are generated from the interest go into our school foundation fund.
Well, there is that.
So this is a public goods project for the state of Wyoming.
Thank you for reminding me. I get sort of excited about this, but
I've been talking about for years, dude.
I'm sure that our schools, have what they need to. It's a little different than marijuana, which I think is, some other states have tried. We're going to try it with finance.
Well, we've got about 15 seconds left. So first of all, I would like to thank you, Governor Gordon, for your time today and being the steward of this incredible, novel, first of its kind project.
Yeah.
I want to thank the Digital Chamber for having us. We're going to have a press release out imminently.
Man, take a shot at Colorado there.
Test tokens and the contracts that have been deployed on the respective networks.
That's on layer 1, dude. So yeah, I mean, this is what I'm telling you guys is going to happen. This is why you're going to see me. I'm telling you guys, I can't wait to see, just discuss hopefully what's going to happen over the next 2 months. But we've been covering this for 4 years. I've been telling everybody, like, there's so many people out there that think Bitcoin is slow and outdated. And I can't tell you guys enough how important it is that Bitcoin is the only true digital commodity on the market that can access the negative energy market. It is worth trillions of dollars, and that carbon credit market, that negative energy outlook is meaning that Bitcoin will essentially be backed by all energy because of the amount of excess that is created. It mitigates your carbon emissions. It stores it as a sense of value. And then you can create Bitcoin products, whether it's bonds and et cetera, off the back end of this with tokenized structures and systems or stable coins. And so what you're going to see is an immense amount of value generated through yield applications and Bitcoin strategic reserves that can then be dispersed back into public goods on a state level, which means that states are going to essentially act as the largest net buyers of U.S. treasuries, bringing more value back to the U.S. dollar, and at the same time, build excessive growth in GDP within those states. And so this is the fight that I want to make, is I want to make sure retail and entrepreneurs can access that sector and that it isn't, let's say, banktified in a way where Wall Street controls that entire initiative and retail and the middle class, the working class, can't operate within that ecosystem. And that is the fight we have to have, because again, I love the philosophical takes of debanking, et cetera. It just doesn't exist. So what we're going to do from a realistic perspective is I want to make sure if banking is still going to exist, it understands and knows that it relies on the working class, that it relies on the entrepreneurship within the United States, not outside the United States. I'm very pro tariff, but I'm also very pro deregulation. And that's because we should be making and developing and innovating within the US, not forcing. The reason why boomers might not care and you see people go, tariffs don't matter. It's because, dude, they're from the 1970s. They're from the 1980s. They have fucking 2 or 3 properties now worth multi-million dollars. And us, the younger generations, we're the ones that are facing the long end of this. We can't afford, to buy a home out here, especially at these interest rate levels with the supply demands and everything that exists. It's a different world at this point. And I don't want to be forced as a 27-year-old entrepreneur to go raise and build in Dubai, to go raise and build in Singapore. My family's in the United States. I'm an American. I want to be American first. But everything we've seen over the last multiple decades has pushed Americans outside the US. And I want to bring that back here. And it starts on a state level and then on a federal level. And again, I want to make sure that we're able to obtain and access those networks especially in these energy markets. But next up here, guys, they're going to be having, I believe, actually, I don't even know who is it. Richard Tang yet? No, that's in about 40 minutes from now, guys. So make sure you guys hit that like button. We got Richard Tang, the CEO of Binance, coming on very soon to talk about the future of these markets here. Right now, it looks like we are on schedule. They're actually a little bit of ahead of schedule here. But Beyond Defense and Digital Chambers' vision for the next decade here, which is just the founder and CEO of Digital Chamber and the president. So I don't know necessarily what's going to be the outcome of this conversation. The next big one, though, Caitlin Long, of course, founder of Custodia Bank, huge fighter for pro-Bitcoin initiatives and the anti-choke point operations under the Obama and Biden administration. She's been an absolute leader. She's an absolute blessing to the industry, with Bill Haggerty coming on at 2:15. So it's going to get incredibly exciting here through the rest of the afternoon. But Drew, I guess we can take some questions here. Let me check in on the trade as well.
Oh man, and I'm just banning everybody in the chat right now. Unbelievable.
You're banning
everybody.
Oh, no, don't ban everybody. Why are we banning people?
Justin. No, I'm just kidding. We got raided by some scam token.
Oh, gotcha. Yeah. You don't like the scams?
No, absolutely not. I mean, they're obvious for like crypto natives or people that have been here for a long time. But man, I mean, some people that are new to the market, I've ran into some. They fall for the scam. So I'm out here doing some work. Josh, I mean,
I see what you said. Yeah,
I got rid of it. One thing that comes to mind is what kind of regulations, if any, will happen to Wintermute or the market making that's been going on, the arbitrage. There's been a lot of essentially Binance, by way of Wintermute, sending gig amounts of Bitcoin and other assets down through Wintermute, selling it off, and then letting all of that price action happen to the downside, giga liquidating as many positions as they can, and then they simply just buy it back up. That is something that I wonder if there's going to be massive amounts of controls put into place to stop. But as it sits, I mean, like they already have massive amounts of arbitrage happening from JP Morgan on silver and have for years on end. They haven't done anything about that. So, it is something to think about, but it's,
well, I mean, your answer to your question there is like, do bankers want some random foreign, entity market making? They want controls. So I think you're going to see tons of controls of on ramps and off ramps. At the same time, though, it's, we kind of do need those protections. Even though they've been manipulating the price of silver and whatnot, and you can make those cases, it's much more dramatic in the crypto space because there's way less, there's no regulation. So it's the wild, wild west out there. And you see this with things like Hyperliquid. You see this with, pretty much any meme coin, Launchpad. I've been somebody that's, been in the meme markets. I've helped, launch fair launch tokens. But even if you're like launching completely fair launch tokens, you still run into the open DEX and the open network. And if anybody captures on and tacks onto that, like you said, they can immediately control those narratives, those valves, and they can market make. And they have all of this information on an AI structure. Binance is they're just known to they just got rid of a market maker for inside trading. I think all inside traders and pump and dumpers and these groups should, I believe there should be a task force, because one, the audience, you guys, you deserve that. We can sit here and say, we don't have those groups, we don't participate within it, but they have no transparency. And I feel like you guys as an audience and just crypto traders in general, you guys run into this on a very consistent occasion where there's no established trust within the ecosystem because you don't know who's not disclosing advertisements. You don't know who's in these artificial groups that have 40 plus people in them that are like, oh, we're all going to talk about this token on this day. And then on top of it, even though that's not illegal to like market, you don't know if these people are buying before and then like ultimately dumping on their communities. And so that needs to be addressed. I don't know if that's a crypto task force. I don't even know how that operates, but we saw Logan Paul and Jake Paul do this with hundreds of millions of dollars. I mean, look, all your celebrities, all these, even you could, I would say Gary V probably did this with the group with the NFT and the cypherpunk, or the crypto punks, but it's so hard to come into that sector and say we need regulation, because the problem is like as soon as you give the government an inch, you give them a mile. And so it becomes this incredibly controversial topic where we don't have the answer. I don't know the answer, but we know it's a problem. And so do we allow that problem to continue to exist, or do we try to address it? And that's where we have to have these open conversations and speak up in regards to this. I wish you would hold creators more accountable, but unfortunately, these creators, dude, they're going to come back. All the meme coiners, you guys know this, that promoted hundreds and hundreds of meme coins, all undisclosed advertisements. They're gone right now.
That's why I have to be super clear about that.
Months.
What you just said is why I'm like just clear as day about this meme coin mega return. Like the moment that the market starts ticking over again, there will be some memes that come back. But vast majority of what we've seen just go from 0 to 100 million back down to 0, some of them to 1 billion. A lot of them are dead forever. And
they think I'm an agent.
Wallet.
I'm an agent.
I mean,
Drew.
you have a Fed haircut. I mean,
Yes.
there is no lie.
I'm a Fed, guys. They got me. That's why I'm actively pursuing and being the one behind a lot of the Bitcoin strategic reserves for you guys. You're welcome, guys.
I'm down the hall from you. And yesterday I hear, according to you TikTokers, XRP is going to $10,000. And here is why. Just
and then I trashed on that guy, dude.
Oh my God.
Dude, there was I saw a video. I reacted to this video. It's gonna be on TikTok today. The audio was, I have to refilm it. There's a TikToker, thousands of likes. God apparently came to him in his dreams and foretold him a prophecy that XRP will hit $888 at a certain date or time point. And that God is suppressing the price action. I was like, I don't think that's the case. I don't know if they know this, but Ripple's founder donated to Kamala Harris campaign, which is a huge transgender activist group. I don't know if God is, cool with all those things. I don't know if that's considered Sodom and Gomorrah or whatever you want to classify it as, but that is the reasoning. $888, guys. God told him in his dream. Yeah, it's insane, man. It's insane.
Yeah. In that instance, like if XRP is nearly $1,000, your bread $10,000. A loaf. Like we're talking about like a hyperinflationary Venezuela on steroid situation. So please don't wish for that. XRP though, I mean, begrudgingly, my family will be very well off. I mean, it's going to be great for my family, honestly, if XRP even hits $10. I'm expecting more like 6, 5 right now. And seeing that it finally, like once XRP, now that it's really stamped that win against the SEC, and we have that regulatory clarity shift in general, there is like, I think it was Steve-O Crypto, one of the great people in our chat. He's like, why do people still fall for it? It's because there is more content made about XRP than literally any other altcoin on the planet. When you go out there, you get involved in crypto and you start looking at what are cryptos, and you're just berated by like all of these hyper bullish collapse of the US dollar all into XRP videos. Then it's easy for someone that's from the outside just getting involved in crypto to fall into that narrative and into that echo chamber. But it is our job to highlight the immense, like I think it's $300 to $400 billion market cap to get it to that $5 or $6 level, right? Accounting for token releases and things like that. We have to keep in mind that it's going to take $1 trillion for XRP in market cap to hit $10. So calling for an $800
market cap doesn't matter.
It really does, though. It really, really does. Like, and that's the thing. It's so like if you must be involved in the XRP Ripple narrative, which I literally reiterate, I still hold XRP to a degree. Some of my family members only hold XRP, but thankfully we started talking about it when it was like 17 to 40 cents. I was like the comfortable entry points, right? Now they're up. Great. And they're sitting here laughing at me like, okay, just for some context. Chainlink, $1.90, original buys. Re-added heavy at $5 and a tiny bit more at $13. My average buy on Chainlink is right around $3.94. XRP, that same time frame, went from like 60 cents, I think it's 60 to 70 cents, up to these $2.50 levels. That's a great move in general. You're outpacing inflation. Congratulations. That's the whole goal in crypto, is to outpace inflation and to not fall victim to the Federal Reserve printing your buying power into oblivion. Just where the market cap sits currently at the you know, I mean, XRP is actually right behind. I wonder how close XRP is to flipping Ethereum in terms of market cap, because that is something that is absolutely crazy that it's a potential. So XRP is at $138 billion market cap right now. Ethereum is at $241 billion. So there's a degree of separation there, but XRP is catching up in a pretty crazy way. Like, this is something that blows my mind that is happening. It is something that I didn't see as outside of the realm of possibility, but the price action upside for Ripple, the stock, in my opinion, is much greater than the price action expectations of XRP. Like, in general, I could see it breaking out of these previous, like, it's building a shelf, health on a shelf up here in the stratosphere above $2. Like, I'm not going to be surprised to see this thing hit $5 or $6 this cycle. But Ripple, the stock of Ripple, the company Ripple, is something that I am personally more interested in holding just for the time being. You know what I mean? That's just something that I have to reiterate for people, because they get stuck in this kind of echo chamber. I wonder what is the biggest mover right now. Curve, Shiba.
Curve is right now. Yeah, market's kind of taking a hit. I mean, that short position played out well. I just closed it out for about 25% profit. Yeah, it was
nice.
$1,200, which was nice. But I'm watching this right now. The reason why I closed it is because I mean, it was 5 minutes ago. But I mean, I don't know if we're gonna break to the upside here, but Bitcoin, again, I just want to extensively show you guys that futures gap is all the way down towards. If you're trading right now, I'm just watching that futures gap, which is at 84. It's at 84,415 and 85,130 needs to fill. And we're just following the SPX, which just hit the 200-day moving average. So getting a little bit of bounce off here. Don't know if we're going to fill this gap, but yeah, we got the gap here on the SP. So if that happens, Bitcoin's going to fill that gap there. ETH is holding 2,000. It is trying to stay above 2K right now.
We're about to roll out that.
We're going to get a little drop.
That trade channel. I'm excited for that trading channel on Discord. We're about to roll it out. Make sure you get an L Bank account, sign up and get in there. We're all going to be kind of one hive mind, you know, and obviously, you know, we'll have different. Josh is better at shorts than I am. So I don't feel like messing with shorts until I'll start messing with shorts in like December, you know, January.
I'm average. I'm not like a crack trader.
You do pretty good, you know, and I do.
But we have fun with it. Yeah,
I do good on longs though, and I'm not always getting into it. It's just when I see the spring built, that's where I'm really getting. And it's good to acknowledge what you're best at in terms of trading, right? So I'm excited for that, and everyone that's out there watching, make sure you sign up for L Bank. And the whole goal here in the trading is not to find that 800,000% gain and never have to work again off of one trade. It's about consistently building a position higher and higher and higher, and then protecting those assets. Okay, so you can make it very quickly. You make money. Yeah, please just focus on this. Make money slowly and protect it quickly. The name of the game is not to make a bunch of money quickly. It's about protecting money quickly and making that money slowly. I got more. I'm going to hop back into the ban zone here real quick. Oh, we got them. Nice. My boys are on it. But I am going to get ready. I'm going to host another show on X here in a few minutes. Josh, I'm going to leave you to holding down this thing. You know, I know we might have some more people coming on, but I got to get ready for this other one. Appreciate you having me on the show, though. It's an exciting time, man. Like, this is really, we're seeing the groundwork for crypto being here to stay. And us, this is essentially like being early investors in AT&T, early 1900s. This is literally like having an access point into generational wealth. And for the people that are out there understanding how this world is moving and seeing these moving pieces all come together and spending your most valuable asset, which is your time, with us here on the Discover Crypto Blockchain Basement, I appreciate you from the bottom of my heart. With that being said, Josh, I'll let you. I got some T-bone lamb steaks I'm gonna eat. I'm kind of excited. Okay, I got more T-bone lamb.
Pretty freaking good to me.
I'm pretty good at cooking them. So
if you could do me a favor, the Uber is going to be dropping off some food at the front too. So if you could put that in.
Yeah. I'll sit up there.
Or have Isaac run up there real quick or something.
Yeah,
Thank
we'll
you.
make sure you get your food, man. But I'll see you in a bit.
Thank you. Appreciate you, Doug. All right, chat. What are we doing here today? Schiller make history. Yeah, guys, don't pay attention to this moon on ETH BS, dude. It's a outright scam. They're just botting the channel here to that's the average scamming project there for you guys. Let's go over to, of course, our